Welcome, it's denome. This video is a market update for the Bitcoin and the crypto markets, and today is the 24th of November 2022. This video is called the reality check, because every now and then it's a good idea to take a look at what is your own personal bias and kind of take the opposite view on it. So this is basically a look of what the hell is really going on with the crypto markets, because normally I'm a pretty optimistic guy. I do believe Bitcoin will eventually turn around, and eventually it will go to the $100,000, $1 million, and so on and so forth. Eventually it will be an alternative for the fiat system. It already kind of is, but to take even more market share from that. But this video, I just want to take a look at the opposite view of Bitcoin. Because as you probably know, my last market update, I was quite bullish here because we went out of the danger zone here, and then the FTX black swan happened, and then the markets basically just dropped a lot, about 30% across the board. Luckily, it was not the altcoin Cryptogeddon, which I feared it would have been, but it wasn't, at least yet. So right now we're just hovering here about $15,500, which is a lower low compared to the price that we had here, which is not great because you don't really want to see that after a breakthrough from a bearish channel. So that's a little bit scary, to be honest. So anyway, in this video, let's take a look at everything bad about Bitcoin and crypto. So this video is quite bearish, but try to bear with me because there's some really important information that as an investor you have to take into account. And if you can survive this video and still have a bullish view, that's great. But if you take a look at this video and you're like, oh shit, I think I should hedge against some of the downside, or oh shit, I should have done something differently, then that's a good indicator that you actually learned something. Because definitely I've done many mistakes during this bull run and during this bear market as well, and I wish I would have done things differently, but you cannot know everything. For example, I thought Fed would already pivot a lot sooner than it still hasn't pivoted. But first off, let's just talk about the crypto market. So we have the FTX withdrawals frozen here, and that caused the markets to basically crash. And it's not the only company, because right now the contagion has continued to a company called Genesis. You may have heard about this. So Genesis was seeking a loan of $1 billion. So eventually they said, okay, so this FTX thing happened, we have a $7 million hole in our balance sheet. And then they said, oh, actually it's a little bit bigger. It's not 7 million, it's $175 million. And now suddenly they are looking to get a $1 billion loan. But nobody came into the rescue, so now they're actually saying already that, okay, let's just go for 500 million. So if anyone can give us $500 million, that would be great. And as far as I know right now, nobody has really taken the offer either. So Genesis is in big trouble. But Genesis is part of a bigger group called a DCG. So DCG, the CEO is Barry Silbert, and they have $2 billion in debt after the FTX event. So DCG is a major company in the crypto space. They own CoinDesk, you probably know of the news website. They own Grayscale, which currently owns $10 billion of Bitcoin. They have this Bitcoin trust. They also have the Ethereum trust and other trusts. And eventually they would like to convert it into ETF. But they hold a lot of Bitcoin, and they own a bunch of companies in the space, as well as FTX and Alameda Research own a bunch of companies in the space as well. But DCG is currently under fire because they have this $2 billion debt. But eventually Silbert is saying that, fine, it's all fine, don't worry about it, it's okay. But if we scroll down here, it's a little bit rough, because the company has loaned Genesis roughly $575 million already. And because Genesis is now $1 billion under, I don't think they will be getting this money back anytime soon. And also DCG, they had to absorb $1.1 billion of debt from the bankruptcy of the Three Arrows Capital, which owned Genesis. So this is how the contagion continues. Everybody is a little bit loaning from everybody else, and when one goes bust, the assets get frozen, and then everybody has to basically freeze their money transfers all over, and all the money laundering is stopping, or at least slowing down, and all these transfers are slowing down as well. So anyway, DCG is now under fire, and DCG, at the worst possible situation, is that they will have to unwind the Bitcoin out of the Grayscale trust and sell it on the open market or sell it in OTC trades. And if they have to take that 2 million Bitcoin that they have in the trust, that would of course put more selling pressure for Bitcoin, and that would not be great for the Bitcoin price, right? So that's another scare that we have. And also, because the Bitcoin price has gone so low already, it's 15,500. Now it's back to 16,500. The miners are feeling the pain. And there was one miner here that you can see, crypto mining and staking firm Foundry, by some of troubled Bitcoin miners compute North's assets. And this was a mining company worth up to $500 million that could not fulfill the debt obligations because of the rising interest rates, because of the falling Bitcoin price. So they had to sell their entities to companies like Generate Capital, which is a subsidiary of the digital currency group DCG, the parent company of CoinDesk. So now you start to see how much systemic risk is in the DCG. So if DCG is going under, that's not going to be great for the Bitcoin mining industry, for the Bitcoin industry, or Bitcoin price. But overall, eventually, of course, it will be good if bad actors are cleaned out of the market. I don't know if DCG is a bad actor. We didn't really know if FTX was a bad actor until it already went under. But now a lot of, if you're betting on Bitcoin, you're betting also on DCG to survive. If you think DCG is going under, then you don't want to really have money on Bitcoin. So that's just one aspect of what I'm sharing here. But luckily, there are companies like Coinbase, for example, who does actually have 2 million Bitcoin in their balance sheet. They are a publicly traded company, so they have to show their liabilities. Unfortunately, Coinbase does not provide the proof of reserves on-chain numbers at all, but they do give us these numbers from their the shareholder report. I think that's where these numbers are coming from. Anyway, it's not 100% safe, but Coinbase should be safe as long as they are not committing fraud. Kraken also should be fine. Maybe Binance is fine. Hopefully, we don't really know about it. But also, if you're betting on the crypto markets, you are betting for these companies to survive. Because if FTX took the price of Bitcoin down from here, what was it? It took down like 22%, and it stayed there. If another big company goes down 20%, that would make Bitcoin to fall down to $12,000. So you're basically betting also that these companies will survive if you are betting on Bitcoin. But then that's not the only thing. Then we have this can of worms. So if we take a look at this tweet here, this is from Coin Bureau. And he's retweeting this tweet from Sam Bankman-Fried. And Sam Bankman-Fried is still speaking on this New York Times event, the Deal Book Summit, next Wednesday, 30th of November. And just like Coinboro is saying here, the conspiracy theories are basically now the only theories that make sense. So if we take a look at what is this deal book event, I don't even know. But if you take a look at the speakers, you have the mayor of New York City, you have, and this is the new speaker, you have Ben Affleck. I don't even know what he's doing here. Artists Equity, that's the company. Okay, you have the Sam Bankman-Fried, you have the CEO of TikTok, you have BlackRock, you have Netflix, you have Amazon, you have Israel, you have New York Times here, of course. You have the US Department of the Treasury here, and then you have President Volodymyr Zelensky from Ukraine, you have Zuckerberg. So you basically have all these, like, if you ever wanted to make a conspiracy theory, these are basically the main actors for any conspiracy theory out there. The only guy missing from here is Klaus Schwab and Bill Gates. I don't know why they are not attending this event, but they would basically make this 100% conspiracy theory land or event. But anyway, this is happening, and I don't know why this guy is still speaking here, because the company, the FTX company, is based in Bahamas, and in Bahamas, if you steal $5 hot dog, you go to jail. But this guy is still free in Bahamas in his own penthouse. So I don't know what's up with that. The media has been extremely gentle with Sam Bankman-Fried, even after it's basically already proven that he stole the money from the investors, and investors just lost their money with it. So I don't know why New York Times is still holding this event and basically talking nice things about Sam. It's just crazy. Anyway, let's continue. Alameda Research, and now this is an interesting topic. I think I talked about in the last video as well. Alameda Research is the top holder for USDT, and according to Tether, the USDT that Alameda Research bought, they bought with real cash. So according to this article here, Alameda Research has bought $36.7 billion worth of USDT using USD. And now, because Alameda Research is basically under bankruptcy, they will eventually probably have to unwind some of the USDT. And this is bad for a few reasons. If we take a look at the market cap of USDT, you can see the current market cap of USDT is about $65 billion, which is about double the amount of what Alameda Research has taken in its lifetime. So Alameda Research is basically holding half of all of USDT. And if they have to unwind the USDT, you have to question, does Tether actually have the reserves to unwind all of that USDT back into USD? That's one risk that we are currently taking in the crypto markets. Another one is that if we call this fake money, let's say all of this is fake, or all this 36.7 billion is fake. Well, this $36.7 billion of fake money was still invested into crypto. And if this money stops coming into crypto, this Tether, all this money that came into crypto, if that money stops coming into crypto, that means it will take a long time to actually get real money into crypto and to pump the markets back up. Because this was, if it was fake money, it took a long while to pump the money, the markets up. And if we don't have that fake money anymore, it takes a long while for the markets to actually go up again. And so it's basically, if the money just flatlines, it doesn't come in, that's bad. But if this money actually exits the crypto space, that's also bearish for the markets, because that means that the Tether is, even if they can fulfill all the redemptions, everything is fine, that still means that the money is exiting crypto. So there's only bad outcomes. Even if it's flatlines, it's bad. If it goes down, it's bad. And then you have an additional risk that Tether cannot hold these redemptions true. So that's another risk that we are currently taking in the crypto markets. But that's not all. and I just want to take back a little bit, because I'm just putting out all the bearish things that I've seen, but these are not the only things that are bearish in the markets. But there are bullish things in the markets as well, but I just want to put out the things that I think are the most bearish here. So one thing, this is an article 2 days ago, but we've seen this for a long time already. I haven't really talked about it in this channel, but I've seen this and I've talked about it at least on the Telegram group. But anyway, US Treasury yield curve recession indicator is flashing red. So if we go to the indicator here, you can see that the 10-year yield minus 2-year yield. So basically you have the US Treasuries, you have the 10-year Treasury, you have the 2-year Treasury. When they invert, that means the number here is minus. And as you can see, every time the 10-year and the 2-year 10-year and the 2-year yield, when they invert, after that the recession comes. So that's basically happened every single time in the past, and now the yield curves have inverted. So it's signaling a recession, but the recession, at least officially, is not here yet. And during a recession, things could still go worse. It could also mean that the markets have already bottomed when the recession is announced. But anyway, that this just signals that a recession is coming. And then you also have the 10-year and the 3-month Treasury bond, which are also inverted. So both of them are currently inverted on the negative here. So this is a signal that a recession is coming. And then you probably heard about this from Joe Biden or in the news or somewhere, that the retail sales of US are actually looking good. So the retail sales came higher than was expected. So these were 1.3%, which is good news, right? Except if you take a look at the US credit card debt, you can see that the credit card debt is currently at the same level. Now I have to go back to the overview here. Is at the same level where we were before the 2020, before the crash of. Oh shit. Let's go back 5 years. I think I can go there. Yeah. So currently the US credit card debt is at the same level we were here in 2019 before the 2020 crash. So all these retail sales that we're currently seeing, these are coming from the credit card debt. So there's not much more debt that the people can actually take. And also one of the reasons why the US retail sales are up is because of inflation. When the inflation is going high, people go into survival mode. So they buy food, they buy even diesel. If you own a farmland, you buy things in advance because you expect the prices to go up in the future. So retail sales, when they get scared and they buy what they need for survival. And they've done that already. They have their stocks up because they are bracing for impact. And they did that using the credit cards. So I don't believe that the US retail sales can go up much further from here, because the real economy is not really doing that great, because the energy prices are going up and so on and so forth. And the same situation is happening in Europe as well. So these things are not looking good. And also we can take a look at a few other indicators here. We can take a look at the mortgage rates. So let's take a look at the 30-year mortgage rates in the United States. You can see that we are currently, let's go to the monthly view. The mortgage rates are just way above the usual numbers here. Even if we go to the logarithmic chart here, you can see that the mortgage rates are currently at 6.5%. So people have to spend more money on the interest payments on their houses, so they cannot afford the housing. So the housing market eventually will have to compensate for this by coming down in price. And these interest rates rises also affect the crypto companies, as we saw here in the debt obligations. Of debt, they bought these miners, but the miners could not make a profit anymore when the Bitcoin price was going down and when the interest rates were rising. So that was like a double whammy. I have to do this. Anyway, that's one thing. And then another thing, this is basically the final piece of the puzzle. This is the S&P 500 index. If we go to the daily view and we take a look at the prices here, this is what we are seeing. So we are currently almost hitting this top channel here. And the prices have had a nice, really nice rally. But eventually this RSI line will break like it has done in the past, because the rise in the stock market is not supported by anything real. We really, for the markets to basically bounce above this channel, it would take new money, new stimulus, or for the real economy to actually really recover. But because of all the energy policies, everything that's going on, it's very hard to see that we will actually have a higher number here. So this is looking like it's peaking and then down we go again. And when the S&P 500 index is going down, I don't think Bitcoin is ready to decouple yet. If it does decouple, that's a great sign for recovery. But for now, this is looking quite scary for me. If we were somewhere here with the S&P 500 and Bitcoin was where it is right now, that would have been a sign that the Bitcoin would recover. But because we are currently almost at the top end here, that's not a good sign. So anyway, all of these things together, I just want to basically give out a fair warning that we might still go lower. So that's the opposite of my biased view that Bitcoin eventually will survive, because right now, if you believe Bitcoin will hold these prices, you also have to trust that all these companies are gonna survive, and even you have to believe that the S&P 500 doesn't crash. So you have to have a lot of faith on top of a lot of faith on top of a lot of faith for the crashes, for the prices to actually remain where we are right now. And just to think about, okay, let's go to 30,000. What would be the catalyst for this? Because right now people are still in fear mode. So all in all, the markets are shady as fuck, let's say that. And I just wanted to highlight all the bearish things that I'm currently seeing, or at least the main bearish things that I'm currently seeing. I still believe in crypto, and I refuse to sell all of my crypto because I do believe in that 5 to 10 year future. But I'm also hedging against my positions. So even though I took positions here on my altcoins, I have sold some of it just to hedge more for the downside. So currently, I think I'm like 40% in stable coins or in gold right now. That's not enough in my opinion. I might sell a little bit more, but that's where I'm currently with my portfolio. And most of my crypto portfolio is right now in Bitcoin. For example, a lot of the like if you go to BNB BTC, for example, this is a bet that I took recently. If you remember my last video from yesterday, this is the RSI is just so oversold territory, and we are at the all-time high with BNB BTC that I just sold all of my BNB that I had left. It doesn't make sense to me from risk to reward perspective at the moment, BNB. So I sold all of my BNB as well. You may consider it, maybe not. I'm not really into FUD for BNB or Binance, but the BNB BTC charges is looking quite bad. So I sold all of my BNB that I had left for BTC. So this is just one here. If you take a look at the Matic BTC, it's not that bad, but we're still here at the oversold territory. So BTC should perform better than Matic in the near future. Who knows if it does or it doesn't, but anyway, just BTC stable coins, those are the ones that really make sense to me more at this current market environment. Anyway, eventually there will be a time for altcoins, but right now many of the altcoins just aren't there for me at the moment. So I just wanted to make this video, not really to sign all the alarms, but just as an investor, I hope you take all of this in and analyze this from your perspective, and you build your own bias of what's going on in the near future. So anyway, that's it for this video. Hope you liked it. Consider subscribing, and I will see you on the next video.